talking about we're talking about the Fed, Brandon.
Afternoon, JP.
Good afternoon, Brandon.
September 10? It's the 10th today?
11th today.
Today's September 11th.
It is.
All right, September 11th.
It's ironic.
Opened up the newspaper to see terrible news.
Yes.
Of course, people are being killed in this country for their thoughts and their words, which is always difficult. It's not the political climate either of us want to live in. So I'll acknowledge that before I'll talk about what else I saw in the newspaper today.
Sure.
That we've had revisions on jobs, 900,000, some fewer jobs than we expected.
Yeah, they expected a million one, by the way. So now the revision is almost zero. Almost zero.
They're expected, yes,
Yeah.
Correct. So, and revisions are a normal part of the BLS. We expect them. Revisions actually show accuracy, not inaccuracy.
Correct. Yeah, there is the way it works is that the BLS will put surveys out to ask companies, are you hiring? How many people have you let go? And try to get some of that data. But realistically, people are running businesses. And there is a massive disconnect between major businesses and the 29,000 small businesses, major small businesses that hire half of America. So usually what happens is you have to wait 6 months, payroll numbers come out, and then they have a really solid number to use to revise the estimate. Yeah.
So the lag in payroll. So we've got a lot less jobs created than we thought. Inflation is higher.
Yes.
There's the violence that I just referenced, and the stock market's up.
Yeah, it's up like 1.5% today.
What gives? What gives? Like you'd have to wonder, like, why is this the case? And I want that to be the focus of this conversation that we have today. Why is bad news seemingly good news for the stock market or people who own equity in the market?
Sure. Yeah, I think the major cause of it, if you kind of look at all these confounding factors, is okay, bad things are happening, economically, potentially. What do we do about it? Like, are there ways we can fix it? And a lot of people are thinking, well, one of the ways is the Federal Reserve could lower rates and make the market a little bit more accommodative for businesses.
Yep.
Right. And that number comes out on the 17th, so next week. And we'll see what they do. But right now, the market is pricing in 50 basis points rate cut. So currently it's at 4.25-ish. So it'll be sub 4% for the first time since a long time, probably about 5 years.
So the Federal Reserve on the 17th, dollars for donuts, will finally cut. I say finally because it's been a while since they've had a cut. The overnight lending rate or the FOMC rate to 50 basis points or 0.5%.
Yes.
And that
maybe.
I'm saying yes. I'm saying yes.
Yeah.
It's not a quarter point. It's not a zero move.
Yeah.
And it's not because of political pressure. The data is really showing them, it might be time to lower it. But they are getting mixed data because inflation's going up and they have this dual mandate. More jobs, low prices.
Yeah.
Or steady prices.
Yeah. And what's crazy is the producer price index, so how much the inputs cost actually went negative this month.
Yeah.
Which happens every now and then, but that would mean that there's deflation in terms of cost of producing goods, which means that there's now more room for goods to actually come down in prices for us, right?
Yeah.
It's actually better for businesses in terms of carrying the cost of things.
I wonder how the Federal Reserve will act when the Supreme Court makes a judgment on the tariffs.
Yes.
Because I know that they are not a political organization, but they do have to pay attention to political actions.
Sure.
And I think they were waiting to see how tariffs would pan out. And if tariffs are off the table, or at least executive orders on tariffs are off the table, then they might lower rates even quicker. And I wonder how the market will respond to a Supreme Court judgment, although we don't know when that's going to happen.
Yeah, that's a great question. I mean, if you think about it practically, tariffs are inflationary in their nature, right? They increase the price of goods. Period. For anybody, and then it goes along the value chain to the consumer.
Yeah.
And I think what we've seen is because it's only been 6 months, people have really sat around saying, I think we can eat it for a little bit.
Yeah, companies have been
saying that. But companies also said we can put up with high interest rates for a little bit. And now it's been, several years. So we'll see how it goes. But I agree with you. I mean, I think if the number one inflationary measure going on with the government right now is tariffs, and that goes away, there's almost no reason to have a 5%, federal funds rate or 4% federal funds rate.
Yeah.
It simply doesn't make sense.
It'll be interesting. So let's summarize, and then we can talk about other stuff. But I want to make sure we get this one solid point in, is that bad news, less jobs, and more inflation leads to good news if you hold stocks because the market's going up, because they believe the Federal Reserve is going to lower rates.
Yes.
And when rates are lower, valuations go higher. Companies are valued higher. Investment goes up.
Yeah,
Spending might go up.
The cost of owning and operating and growing a business goes down. Therefore, you can grow it a little bit quicker.
Money's cheaper.
Yep. That's the operating assumption. What's really interesting as far as how this affects regular people and kind of the conversation that we have with our clients is we're going to get the question, okay, rates went down. What's going on with the 10-year? What's going on with 30-year mortgage? Can I refi my house?
Yeah.
And as someone who just bought a house last year,
Me too.
Yeah, exactly. You and I will both be disappointed to know that probably there will be no significant change to mortgage rates.
Not with one rate cut.
Not with one rate cut, and not even with a 0.5% rate cut, because the federal funds rate currently is about 4.25%. It floats in that neighborhood.
Of course, yeah.
It's between 4 and 4.25. If we come down to a sub 4% rate, one of the problems that we have is that the Fed rate really doesn't influence that much the mortgage rate. That's actually based on something called the 10-year Treasury. The average homeowner in the United States keeps their house for 7 years.
Yeah.
Right. And so if you're a bank and you're saying, okay, I need to match my risk between this loan and a pretty secure asset, I'm going to go buy 10-year Treasuries.
Mm-hmm.
Well, the 10-year Treasury has been at 4% since 2022. And mortgage rates in that time have kind of done this, but they've never really broken meaningfully under 6%. Unless you got a deal like a bank discount or something like that. And so, if the short end of the curve comes down, I don't know what drives the 10-year to go down with it, right? It's actually healthy in a market for the Federal Reserve rate to be lower than the long-term debt.
Well, yeah, the yield curve is supposed to go a normal yield curve. That's not supposed to. A normal yield curve makes sense that you get paid more as you give them more
time to pay you back. Exactly.
Yeah, and so now it's like up, it goes down, then back up. Lowering this is just going to bring it to normalcy.
Yeah, and so all of a sudden it's normal. But how does that help anybody?
Remember all this baloney about the inverted yield curve?
Yes.
I mean, like every time we turned around, people would call us and be like, hey, the yield curve's inverted. When's the recession happening?
I read this article on Market Watch. It said every time this happens, there's a recession.
Yes.
And nothing happened this time.
And multiple times.
Yeah.
The yield curve inverted multiple times over the last 3 years.
It's also it actually probably has stayed inverted for about 3.5 years, and nothing insane has happened yet.
I don't think we're ever going to have a recession.
Yeah. Why would we? It's ridiculous.
That was a joke. Where am I looking? That was a joke. Yeah. We will have a recession.
Yeah, no, but
they're healthy. Yeah. They are healthy.
They're healthy, yeah. I mean, you need deflationary periods at some point, and it stinks when you go through it. Like, obviously, people get hurt. No one wants it to happen to them. But, what you could end up with is a situation like Canada, where a house in Winnipeg that's not even a nice house is worth like twice as much as the same house in LA. And one of the reasons why is because in 2008, it reset the price on every house in the United States. In Canada, they didn't have that issue. And so they just solved.
Because they have a responsible banking system.
Right. But they never solved the supply issue.
Yes.
And so what you saw was the power of compounding interest. And now most people can't even afford like the worst house you've ever seen in your life.
Yeah. So it's a supply issue.
Right. And so for them, definitely a supply issue. But, sometimes deflationary periods can really reset supply and demand mismatches. On a bigger scale, and they can do it much faster than they otherwise would be sorted out by the market. It takes time to build things. Yeah, but rates, I also think that the Federal will cut. It's one of those things where I think they've held off on purpose for pretty good reasons. A lot of it's around tariffs. Now that's been 6 months out and tariffs have existed and the government's pulling in some money from it. Companies are adjusting their value chain. I've never seen a more risk-free way to cut interest rates if you're the head of the Fed Reserve. This is like
putting your money where your mouth is there, buddy.
Dude, this is like a red
it on the line.
Well, the thing is, it's a red carpet move. People are saying, please do it. And if you do it and you're wrong, no one's going to be upset at you because they've been begging for it.
Yeah.
It's almost like a golden opportunity to do it, even if it's the wrong move, and no one knows if it will be.
Nobody knows. It's a tough world to predict.
Yeah, but don't worry, we'll get down to a reasonable mortgage rate one day.
What's a reasonable mortgage rate?
Like at the current price growth, probably 3 to 4%. The rate now should be for people with bad credit, not for the best qualified people I've ever seen are getting a 6% interest rate on houses that are the highest they've ever been. That's crazy.
I mean, why aren't they just a product of? I mean, our interest rates are just the product of the cost of money. It has nothing to do with what's affordable or unaffordable.
Well, interest rates are the cost of money, but if you have a high rate on an ever increasing asset the only way you could reasonably buy it is to finance it, eventually people will run out of income to buy it. And one of the problems is that means they either sell to the market at a reduced rate, which no one does, or very few people do, or they sell it to corporations who have high cash flows.
Yeah.
And you consolidate it that way. So it's going to go in not a good market for a lot of people. Mm-hmm. So yeah, it's going to have to it's a weird thing that's going on, but the short term for mortgages, it probably stays locked up. For businesses generally, it's probably pretty good because they can start refinancing some of their debt. They have a different way that they take out debt relative to most people. And it'll be really interesting to see what happens 6 months after the Fed cut. Mm-hmm. That'll be the interesting period of time. Did it meaningfully change anything in the market?
Yeah, it's hard to think this is a one cut move only.
Yeah, I mean, we may not see another one for another half a year. You never know what's they're gonna wait. They've taken their time with this cut. They could take their time with the next one.
No one predicted the Spanish Inquisition.
No, nobody expects the Spanish Inquisition. You're right.
We shall see. We shall see. Okay.
It's important to know that rate cuts are probably coming. We're in wait and see mode for that. I actually don't know if the market pops on a rate cut. I think it continues whatever orderly trend this is in. But if there's no rate cut, I think it could get ugly in a hurry.
There's going to be a rate cut.
Yeah.
I mean, I just can't imagine that there's not. But also, it would make sense that there is no gain because you're.
Yeah, that's the operating assumption.
You're buying on the rumor, selling on the news.
Yep.
Yeah.
Correct.
Yeah.
Yeah.
And then they'll be like, "What have you done for me lately, Federal Reserve?"
Dare I say it's priced in?
It is continuing to be priced in. Mm. Yeah. Cool. So that's our summary of why seemingly bad news is seemingly good news for one day in the stock market.
Yep. And every month we'll get more and more news and we'll just take it in stride.
Cool.
Awesome.
Thanks, man.
Yep.